Assalamu alaikum everyone. Thank you for joining us on another episode of Startup Talks. Today's talk is very special as I'm joined by Mubariz Siddiqui. Mubariz is a lawyer by profession, but he's been with the startup ecosystem all through his career. He's been there, done that. He's seen all the dynamics. Some of the names that he's been associated with include Sarmaya Car, Bikeat, Keep Truck and Swivel, I2I Ventures, Brandverse, Artistic Ventures, Patari, Eid Mubarak, Wonder Tree, Express. This is a list I've taken off of his profile on LinkedIn, but the list goes on and on. And I'm sure I will have a lot to learn from him. I'm sure everybody else will too. So, Mubariz, thank you very much for being here on Startup Talks. How are you doing, bro?
I'm very well, you tell me.
Mm,
Thank you so much for having me, and thank you for taking this initiative. This is actually this is very important, and I'm glad that you are doing this voluntarily.
Thank you very much, Mubariz. Now, Mubariz, uh, before we jump into the funding bit, what's going on, man? Where does the ecosystem stand at the moment? Are the valuations that we are getting, are they really depicting what startups are right now, or are they overvalued?
Well, typically, start early stage startup valuations are primary concerns around how much the company should be diluted for the capital that they're raising, as opposed to a fixed value of the company, right? So currently, most early stage financings are done through safes, which is not a fixed valuation. This is a valuation cap, and that valuation cap is just an indication of what is the maximum value that this particular investor is willing to accept. And that also reflects the kind of dilution that the founder is willing to accept at this stage. It's not anything more. It's not, I mean, the valuation of the business only really truly matters when you're exiting. That's when, or when even during a price round, when the value is actually determined after conducting due diligence, after conducting a more thorough analysis of the business and the market.
Mhm.
Currently, Pakistan is not has not barring airlift and maybe bazaar. We haven't done those later stage rounds this year yet.
Mhm.
And I think as more of those happen, we'll be seeing significantly more a more thorough approach, a more having conducted more diligence to be able to deploy that capital. So I wouldn't fixate too much on valuation. I think the more important metric is the amount of money that has been raised, the amount of funds that have been raised, and the problems that people are looking to solve. I think those are more important metrics than valuations right now.
Sure. Now, since you've been associated with so many startups, you're obviously helping a lot of them with fundraise and everything. Now, uh, in your opinion, when are we moving into the next stage? I mean, into Series Bs and Cs. When do you, in your opinion, when do you think we're going to jump on that train?
I don't think we're very far. I think we in a few months you'll start hearing about the Bikeas, etc., and all these companies that have. It's been a while since they've last raised.
Mhm.
I think very soon they will be doing their later stage rounds as well. Series A. I mean, Bikeas has done Series B, so for them it'll be Series C now or Series B extension or whatever, however they want to take it. But yeah, I don't think we're very far from those investments either. It's easier to do early stage. The canvas is blank. You don't have to do much, etc. For even for investors, and it's easier for those investors to take those early stage risks because it's just safe. For later stage, it takes a little bit more time. You do a price round, you evaluate the business thoroughly, you go through the diligence thoroughly. So I would expect that to happen soon enough.
Okay. Now, you know how things work in Pakistan. A lot of people, they there's absolute lack of awareness even for startup founders. And of course, many NICs are there, many people like yourself are there who do go out of the way and help. But a lot of founders, they don't come into the public eye. They don't have access to these mentors or these NICs, and they don't know which way to proceed. So when we talk of funding, what the hell is this safes and value caps, man?
Hey, okay. So SAFE is a simple agreement for future equity.
Mm-hmm.
This is something that was pioneered by Y Combinator. Essentially, what they mean is that you raise the startup raises money today, and instead of giving a fixed equity, say 10%, 20%, they say, listen, depending on how my next round goes, I'll give you the equity then at the valuation we decide then.
Mm-hmm.
Right now, we just need the money to move on, and because right now there's nothing there, how will you even value the business, right? So typically, what happens is that you so for example, if I want to raise $1 million, I would raise $1 million on a safe. Now, since the investor is giving you money today, they do expect some sort of return.
Mm-hmm.
That instead of like a year later when you're doing a price round where someone's valuing the business, uh, you as an investor today would want some return on top of the person who's coming in a year later when the business is sufficiently de-risked. So what you say is, okay, give me a 20% discount or a valuation cap. So if I'm giving $1 million today, I'm putting a valuation cap of $5 million,
Mm-hmm.
right? That no matter what your next round is, even if your next round is 15, $20 million, my 1 million will convert at $5 million, which means that I will get 20% of your company uh, at at the minimum. For example, your next round is at $4 million. At that point, I want a discount on that valuation because the next investor is coming in at 4 million. Then give me a 20% discount on that. So 4 million per 20% discount would come to $3.2 million.
Mm-hmm.
So my $1 million would convert at a valuation of 3.2 million. That's how it has been. It is usually structured, and that's how it has been. That's what a safe does. The idea and the concept behind a safe is that at the early stages, you should be able to move very fast,
Mm-hmm.
and you should not be bogged down by doing paperwork, by sitting there valuing the company, by conducting serious detailed due diligence, etc. Safe is, it's a simple note. Y Combinator has a standards on its website. You just sign it, put in the number, send the money, and you're good.
Mm-hmm. So it also gives uh, a more independence to founders to move around, I guess, with little influence from investors, whoever's opting in. Am I right?
Could you repeat that? I didn't understand that.
I mean, because whenever investors are investing in any company, they do have some influence with regards to decision making and how founders proceed and take the company forward. So, does this mean that founders have more independence and there's less influence from investors?
Yeah, I mean, in the sense that investors are okay. The way I see it is that investors should be seen as partners anyway, right? You should not be seeing an investor as someone who's just given capital and you just don't want them to interfere at all. The good investors understand where they can add value and and essentially that no one understands their business better than the founders themselves, right? Good investors just know that they need to be there to help the founder get the best out of themselves, to get the best out of that founder, and to help them execute fast or more meaningfully, etc. Or be able to hire new people. So your investors can interfere regardless of whether you have safe or not. They could be someone who's difficult, someone who's just constantly pestering you. The best way to go about that is to make sure you only get investors and you have aligned expectations earlier. Um, but in some level, yes, because with safes, there people can do side letters as well and have some sort of investor rights, some sort of investor protection, can get board seats as well. So it's not unheard of for investors to have board seats, etc., even if they've done safes. But with the price round, you get all those reserve matters, etc., which are veto matters that the investors have. So I would say it's substantially similar to being an investor in a safe or in a price round. especially in the early stages. Paperwork is very different, and safe is less intrusive, but from a more practical standpoint, it'd be the similar. It'll be very same.
Okay. And currently, the scenario in the ecosystem is safes the more popular investment form right now?
Yes, early stage, yes, because it's quick. That's it. It also makes sure that the investor does not have to buy shares, which makes it complicated from their end.
Mhm.
Yes, that's the way to go.
Okay. And uh, where does the problem arise then with regards to sales? Because is it mostly when you move into later rounds when you're looking to raise more capital?
Okay, I think I missed a bit
Uh,
what you said.
of course, when a startup raises funds, there is investment and a lot of investors come and join in. But when the startup moves on and say 6 months, a year down the road, when it's looking to raise more investments, right? And when the actual due diligence and all of those things start, is that because I read your thread, that's where the actual problem starts, and that's when the confusion might kick in with regards to valuations and exits and all that.
No, not really. Just to explain myself better. It's not it's Okay, so here's the thing. If I agree on a valuation cap of say 50 million,
Mm-hmm.
and I'm giving investing say 5 million on your startup, so I'm getting my 5 million will convert at a minimum of 10%,
Yeah.
for example, right?
Yeah.
um, the problem is that 50 million valuation is fairly arbitrary,
Mm-hmm.
right? We just agreed that this company is worth 50 million today. And essentially, why that number matters is if tomorrow, if I exit at 100 million valuation, say the company gets bought out or there's an IPO,
Mm-hmm.
we're talking about 2x return.
Yeah.
Similarly, if my entry valuation was 10 million, my return would be 10x as opposed to a 2x return, right? So that entry valuation does make a difference in my return profile.
Mm-hmm.
Now, valuing something at $50 million is a big undertaking, right? It's a
Yeah.
lot of money. It's a high valuation, and valuation caps are just not solid valuations.
Yeah.
Now, where the problem arises is that when you do very high valuation caps, safes are meant for early stage. When you do valuation caps of 250, $300 million, and tomorrow when a price round happens,
Mm-hmm.
there's a big risk that you have grossly overvalued the company in the beginning, and you've
Yeah.
raised substantial amounts of money at a very, very high valuation, which does not is not justifiable. Um, I mean, if you can pull off a higher value as a price round subsequently, if you raise safes at $250 million valuation caps, and the price round goes up to say $1.5 billion, you've done pretty well.
Mm-hmm.
So I think it can go wrong. Things can go south since investors are following each other at some points or going with each other. One or two could set the wrong cap, and that could be not beneficial for everyone involved. But that's one of those things.
Mm-hmm. And uh, what would you say? I mean, in layman's terms, is why is VC investment the riskiest of asset classes?
Venture capital investment is the riskiest asset class because you are literally investing in a person,
Yeah.
especially early stage VC, right? When you talk about pre-seed, seed, even to Series A, you are literally number one. You're investing in a team, and you're investing in a team to execute an idea that clearly hasn't been done before.
Yeah.
Um, if I was putting up a shoe factory, that's still different because shoes get sold. It's not that difficult market, and I'm putting a factory which is hard assets and all.
Mhm.
In VCs and especially in tech products, early on you're investing in people, you're investing in founders and their ability to execute,
Mhm.
um, and a lot of things can happen to people. People can stop being interested in the problem they were solving.
Mhm.
People can die. People can be involved, get distracted, be involved in different things, or they did not understand, and more likely than anything else, they did not understand the market or the reality well enough. And that's fine. That's why majority of the VC investments fail,
Mhm.
and they stand to make all their returns from one or two big winners.
Mhm. So, uh, in that case, would it be okay to say that valuations, as per safes are concerned, they are more of an assumption than actual valuations, just for people's understanding?
All valuations are assumptions, to be
Yeah.
very honest. I mean, actual valuation is what? Valuation is what, it's, you know how beauty is in the eye of the beholder.
Yeah.
Valuation is in the eye of whoever has capital
Mhm.
and is willing to pay for it. So how is real estate valued? How is a house valued? You could say your house is worth X,
Yeah.
but it's really worth what someone is actually willing to pay for it.
Yeah.
So if I am willing to pay for your company's shares at a certain valuation,
Yeah.
that's the value.
Yeah.
That's how much I value it, because I am making a bet that because it's not like these are not liquid securities. It's not like I can buy today and sell tomorrow.
Mhm.
I'm making a bet that in the next 7 years or 7 to 10 years, this share that I bought at 50 million will be worth at 500 million or 2 billion, etc. That's the bet we're taking.
So, yeah, of course, we cannot compare that to like real estate, because for real estate, something like that, value is mostly determined by market dynamics and how the market is proceeding, right? And now, coming to the nitty-gritties, a lot of startups, they raise funding due to various reasons. Either they may be they may foresee burning too much capital to grow, or they may need more resources, or they may need to expand into other markets, any sort of reason. What do you think is at such a stage? Is it better to go for something like a safe investment, or to go for a price round?
Well, early on, I think pre-seed and seed, and even up to some parts of Series A, you should do a safe.
Mm-hmm.
It's simple. A lot of people have hybrid rounds like Series A, or even they could have partly priced, partly safes as well, because some investors just want to come in late, and some investors don't want to drag down the whole process of the fund documentation, etc. So it could really go either way. So I would say early stage is safes make the most sense.
Okay. Now, somebody put up this question to me, and I won't take the name here, but they were looking to raise about $1 million, 800K to a million, right? And they were a bit confused, that if they, because obviously not all of the money is going to be put in by one person, right? There may be three, four people involved. What happens in such a case that you provide a valuation for the business, and uh, of those three people or four people, whoever are investing, they don't agree to that valuation? What happens? Because from a lawyer's perspective, what does the founder do at that time?
Well, typically early on, the valuation should not. I mean, if an investor really understands what they're doing,
Yeah.
if they see that this is a pre-seed, or and this is not something that is where they can get in and argue valuations, etc. This should be a fairly straightforward question. If the amount is not very high, even from the particular the founder could also agree on a slightly also adjust, depending on how much value that person is going to add. I would say the best way to go about things would be to agree on, you can also, founders in Pakistan don't realize this much, but you can also have multiple valuation caps if you are raising. So say if you're raising $1 million, you could do it from uh, 10 different people, $100,000 each, and all 10 of them could get different valuation caps. Your average blended valuation cap could be say 500,000 or 700,000,
Mm-hmm.
but one person or two people could be at three, two people could be at four, two people
Yeah.
could be at five, six, seven.
Yeah.
So your average cap becomes different. But depending on what a person say, if you are raising money from a former founder in a similar space, a founder who can help you, or someone who can add value, I
Mm-hmm.
would say that's the real true that's where you can give them a bigger discount on the valuation cap.
Yeah.
You can and let them enter at lower valuation so that they can get a higher stake. Because at the end of the day, they are helping more. They're doing more than other people are doing by providing the same amount of money. So they do deserve an extra bit of credit or a bit of incentive to do that. So yeah, I would if an investor is really not agreeing to any valuation cap, or the valuation cap is too high or too low for them, for the investors you don't want to dilute too much early on, because depending on where your business is and what kind of business it would be, and more importantly, depending on how much capital you will need to raise, I would not uh, dilute too much early on.
Mm-hmm. Of course, I mean, they don't have such problems when the investors, whoever are investing, they are already, they've been there, they've gone through the exercise. It's usually this sort of thing arises when you get investors who are new to the ecosystem, say non-traditional investors, like somebody who's been investing in real estate or the stock market, and then wants, because this is a new phenomena, especially for investors in Pakistan. Pakistan has a lot of money to be invested, right? It's just that over the past few decades, it's been channeled to more traditional asset classes, right? And it's great that this thing is happening. Now, Mubariz, what uh, I mean, there is. It's difficult at times for people to uh, get access to VCs and investors. They don't know where to go and all of those things. What would be your advice to them? Because uh, I'm actually seeing, because I have myself been offered as well, right? But I totally refuse, because you see some people actually getting into sort of like a brokerage kind of thing. Do you see that happening? And what would be
uh,
your advice to them?
where that to help people find
Yeah,
investors, you get a fee.
yeah.
People have done that all across the world. That's there, right? To be honest, if in the beginning you're struggling to, I would agree that VC money is still limited to a very small, I would say, socioeconomic group.
Yeah.
And since it's a very small group which is privileged to begin with.
Mm-hmm.
The reason for that is, let's go back to the comment that you made very accurately. Observed that Pakistan has only just started to invest in this sector, right? Before that, it was in traditional asset classes. This is, as we discussed, this is an investment in people. This has never happened here,
Mm.
because people in Pakistan don't trust people in Pakistan. The enforcement mechanism is weak.
Yeah.
You're like, this guy will run away with my money. I'm much better off investing in real estate, even though people have lost insane amounts of money in real estate.
Yeah.
People have people have just lost the entire value of their property, and the property has been disputed, etc. But people still seem to keep going into real estate, which is now changing. Venture capital is still new, and since it's an investment in people, you need people to have some people to portray some sort of comfort and trust that this person is not going to run away with my money, right? That comes with what we call warm intros. Warm introduction is, you know someone and you can vouch for someone, and if
Yeah.
you can be that bridge and give someone that validation and credibility, then that might improve their odds of success in raising venture capital. Uh, that I also see that changing with time. Some people's cold emails and cold approaches have also worked.
Mhm.
I would also um, I would not pay anyone any percentage to get the round together or like stuff like that, unless I'm raising like an insane amount of money,
Mhm.
unless I'm raising tens of millions of dollars. Then I would pay someone, because I know it takes time to pitch my startup to everyone, to get them comfortable with the proposition, and to get people to give away so much money.
Mhm.
That's when it really takes a lot of time and effort. So yeah, you paying someone for their services then. But early on, it's an investment in the founder themselves.
Mhm.
The founder should be able to raise the initial rounds on their own by themselves, and be able to wrap that up, and be able to convince people. Most people will be convinced if what you're doing is has the potential to make them money. That's what investors are looking for, really.
Mm, I've seen this in Europe because I lived in England for like 15 years, and I've seen it it's getting more common there as well now. The concept of scouting used by VCs, it's not as prominent as that in other countries. It's not that prominent in Pakistan. Now, last question, Mubariz, moving away from the founders and the startups perspective, when you talk of VCs in Pakistan, local VCs have not been that active as much as international VCs are concerned with regards to the amount of money that has been put in, right? And uh, 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 do you think the association that is being built, a lot of collaborations have been seen between local VCs and international VCs? Is it kind of like a learning phase for local investors too? Or is it something like that, or is that going to change later on? What do you see?
When you talk about local, who do you refer? Who are you referring to?
I'm not referring to any specific person or
But which kind of firm, which kind of VC firms are you calling local?
local who are based out of Pakistan. There are lots of
Like
investors.
Combinator, I2I, Indus Valley?
No, Indus Valley, I2I, Sarmaya Card, they do have exposure, right? But a lot of people who are coming in, because a lot of VCs, international VCs are who are coming into Pakistan, they look for local people with local market knowledge, right? Which also helps local VCs who are actually new to the ecosystem to get more knowledge about what the what investing in startups is all about, right? Which, in my opinion, is also maturing. The local VC infrastructure is also maturing in Pakistan. Do you see it that way?
Well, there's only one or two. When okay, so a lot of people confuse local VCs with people who have actually gotten the license and registration done in Pakistan.
Yeah.
That's there's only one or two of those that are there.
Mhm.
There's JS and there's remaining all these Pakistan-focused funds like I2I, Indus Valley, Sarmaya Kar, Zain. These are all Pakistan. No, Zain is actually not, but these are all Pakistan-focused venture capital funds, Fatma Gobi included. Those funds are not domiciled in Pakistan. They're set up outside of Pakistan,
Yeah.
but they only invest in Pakistan, and that's the mandate of their fund, right? At least these funds that have been announced.
Mhm.
Now, the challenging part is that these guys started a little early when Pakistan was not as hot.
Yeah.
So they did not have a whole lot of capital that they could raise, or it did not even make sense to raise a whole lot of capital early on. And since they're all relatively early stage funds, they don't need significant amounts of capital. So I would argue that they have played a pivotal role, even if they've not invested a whole lot of capital.
Mhm.
They've helped bring certain companies up, which have then gone on to raise significant capital. Like Atif with Indus Valley seeded Airlift and then put more money in Airlift, and only then did the foreign investors come in.
Mhm.
That's the way they've contributed. They would, since these funds are smaller, they would never be able to match what, say, larger VC funds have can put into Pakistan because of just the sheer amount of dry powder they have. So yeah, I continue to see VCs will be one global phenomena anyway.
Mhm.
Even in India, India is a market of its own. It's a huge market. You can just set up a VC fund for India only. Pakistan is a better proposition when it's clubbed with MENA, etc. And we've seen a lot of interest from there as well. Even for startups, it becomes an interesting market. So yeah, I do see a continuation of VCs investing in Pakistan, global VCs investing in Pakistan as a trend.
They do need collaborations locally because it's also better for them to understand local market dynamics, right? So, Mubaris, thank you very much for being here. In the end, all because you've had up close look at startups and founders. You know what problems do they face, and with regards to growth of the larger ecosystem, right? What do you think in the end? What do you think the problems? How should founders proceed? How should stakeholders proceed? What advice would you have for them?
Well, I would say be very sure about two things: whether venture capital is right for you,
Mm-hmm.
right? That's a very important question for you to answer, because right now there's in this entire frenzy, it's very easy to get swayed and want to raise capital for the sake of raising capital. It's never a good idea. Number two, whatever you're doing, be sure about whether this is right for venture capital.
Mm-hmm.
Because not every play is a VC play. Not every play is something that a VC could invest and successfully make money out of. The kind of money they're looking to make out of, and the kind of time they're looking to make. So yeah, answer these two questions for yourself and then approach the market carefully.
Mm-hmm.
Uh, just because Pakistan's hot right now does not mean you need to take capital and be tied up for the next 7, 8 years doing something whether it makes sense or not. So be careful around it. But yeah, it's interesting times. The most interesting time is that now people who want to build very big things and capital is a constraint. At least that bit is getting solved for to a certain extent. So yeah, exciting times, but should tread with caution nonetheless.
Couldn't agree more. I mean, people are actually getting swayed. I myself am getting a lot of inquiries as well, on how to raise capital and all that. And my advice to them is, it's not necessary. Your startup, whatever business you are doing, you're not doing it for the purpose of raising money.
Exactly.
The purpose of the business is absolutely something else, right? And a lot of things can
Absolutely.
be done without raising capital, without giving out a stake in the company. So, Mubarak, thank you very much for being here. It was lovely chatting with you. This was a good learning experience for me. I hope some questions that people put forward, I hope they're answered for whoever sees them. Hopefully, we'll meet again, not virtually, hopefully in person sometime, somewhere. Thank you very much, Waris. Thank you for
Thank you very
being
much,
here.
sir.
Thank you.
Very
Allah
nice to
Hafiz.
speak to you.
Same
Take
here.
care.
Allah Hafiz.